What up, what up, what up? It's the PAC, man. All things physician associate. And in this video, I wanted to give an example I recently came across that I found fairly interesting as far as pay and salary goes. So I have two friends. They're actually brothers. One of them makes about $120,000 a year, but he's on 1099. And for those of you who aren't familiar with the term 1099, it means that you're not employed by, like, no one hired you. You're a contractor. An example of 1099 is like if you call a plumber to come and fix your toilet. You didn't hire him to work for you full-time or part-time. You contracted him to fix a problem, and if you don't need him, you don't pay him. If you need him, you pay him, right? That's a contractor. So PAs also do contract work. Doctors, nurses, everybody also does contract work where the place doesn't want to have to offer you benefits and competitive pay and match 401k and health and dental. So you know what? We're only going to pay you when we need you. And even if we need you full-time all the time for the rest of your life, we're just going to pay you if you work, I don't know, $50 an hour and you do, 40 hours a week. We're just going to 50 times 40 and we're just going to put that money in your account. It's on you and Uncle Sam. You're going to have to pay your own taxes, figure out your own life. So that's called 1099 independent contractor work. So this particular PA, he makes about $120,000 a year as an independent contractor. So the money gets put into his account. If he made $120,000 that year, there is $120,000 in his bank account, or the money was placed in his account. And his brother makes about double what he makes, a little less. He makes about $220 a year. W-2. On paper, like as far as if I was to say, hey, send me your pay stubs, let's say, they made the exact same amount of money monthly, let's say. Like both of them cleared about $10,000 a month. Little more, let's say, whatever, roughly, let's just use whole numbers. They both made about $10,000 a month, and I find it absolutely fascinating that at $100,000 a year, you're ringing in about $10,000 a month in your account, 120, and but if you're W-2, Uncle Sam is taking so much, like the taxes are just so heavy that you literally end up with about $10,000 a month. So then I guess the question is, well, Mr. 1099 still has to pay, taxes. So how does that work? And, I have videos on that as well. But as a recap, it's all about the way you set up your taxes, man. And there's all kind of ways you can set up taxes, but as far as my CPA goes, they're always helping me how to structure my taxes legally. And basically the way to do it is to open up your own LLC. Like, don't allow, if you're a 1099 independent contractor, don't allow your company that you work for pay you directly as an individual. Like, don't let them pay John Smith, you. Open an LLC, JS Incorporated, whatever, just an LLC, and let them pay the corporation, the LLC. And then the LLC pays you. An example of that would be, let's say if I call a plumber and it's his personal cell phone and he picks up and he goes, yeah, hello? Yeah, I'm looking for a plumber to come and fix the toilet. He's like, yeah, I'm a plumber. Well, what's going on? What area do you live in? Okay, I can go. If I pay him, that's it. That's him by himself, right? As opposed to if I call a plumbing company. Hi, yes, good morning, plumbing, whatever, how may I be of service? Yeah, I need a plumber at this location for a clogged toilet. I don't know. And they go, okay, sure, well, one of our technicians could go out and assist with that. And then they go and hire a plumber that they work with to go and fix that toilet. Notice that I'm paying a corporation. That corporation is paying the contractor, right? So if I paid, let's say, $100 to have my toilet fixed, and they turn around and only give the contractor $25, let's say, to go and fix the toilet, then what happens to the $75? That falls under a different bracket of getting taxed. That's what we call, that's business expenses, and the cost of doing business to keep a business operational. That falls under a different bracket than you personally receiving the $100. You got to pay taxes heavily on that. So it's easier to pay your LLC and then let your LLC pay you for your services. So it's like a business within a business, right? A business paying a business, and then that business employing you to work. So me personally, I am a 1099 independent contractor, but I have an LLC, and my LLC hired me to work as a PA. So although the company I see patients at pays my LLC 100%, my LLC only pays me as an employee to say 25%, 50%, whatever you decide, and therefore the other 50 to 75% is the cost of doing business. Capital. It's write-offs. It's a matter of speak to your CPA, speak to your accountant, and these people know what they're doing, and let them set up your LLC in a way that's beneficial to you. And then, so additionally, besides an LLC, there's really 3 ways you can file an LLC. To my understanding is there's what's called the sole proprietor, which is you. Like, yes, you open an LLC, but when the phone rings, I pick up. It's just me. It's my business. I'm the sole proprietor. I'm the only person that benefits from this. And then there's what's called an S corporation or S corp, and that means that yes, I'm the owner, but I'm gonna hire people to work. And that's where I'm at now. My LLC is an S corp, where yes, I'm the owner, but I hire PAs to work. And the only PA I've hired is myself. It's okay, that's legal. I can hire myself to work and pay myself a salary. So I'm running a business, but I'm also seeing patients. So I'm the employer and the employee. And that's just, these CPAs, they're very good at finding loopholes. The devil's in the details, I guess. The law was written, but if it's written in a way where you leave wiggle room for interpretation, then it is what it is. That's just legal. And then lastly, there's like C corporation, which is just it's above my understanding. I've never looked into it because my accountant said S corporation would make the most sense for your current situation. So I looked into S corp the most. I didn't really look too much into C corp. And then so in that case, that's how, that's something, for some people, W-2 is just, it comes with a blanket of security, a peace of mind knowing that someone hired you, and unless you do something terrible or the company's downsizing or something, there's really no need for you to worry about your job security. You're secure, you have a 401k, you're with the company, you have tenure if you've been there for a while. And with an independent contractor, they don't owe you an explanation. If tomorrow they call you and say, hey, we won't be using your services anymore, then that's it. You're not an employee there. So that's something to consider. There is, like I mentioned, some people like the security of having W-2 and someone to match you with the retirement plan and to provide a discount on your health insurance and what have you. And then some people say, you know what, give me the money, I'll figure it out myself. So just wanted to kind of give you the two extremes and just kind of outline a little bit of the differences. They are very on the opposite ends of the same spectrum. So anyways, I'll leave it at that, man. Hope this video reaches you well. If you have any questions, you know where to leave it, man. Much love.